Why has the stock market soared to new heights this year, despite the uncertainties of geopolitics and shifting trade policies? Today on 13th and Park, Paul Auslander, president of Seabridge Private Wealth and the former chair of the Financial Planning Association, talking about what's hot, what's not, and why the Trump tax cuts could be a boon for Americans. We're talking about financial security and why trust, not money, is the ultimate currency. From Ballard Studios' remote location in the nation's capital, it's 13th and Park.
The hard things that are necessary, we either do it or we'll pay the price down the road.
That often is missing in politics.
We have to solve everything.
It's a nightmare.
You and I can differ, but that doesn't mean you and I cannot be friends.
I have faith in the American people.
Those are the facts.
The Illuminati, right there. Aliens could have invaded and nothing would surprise me at this point.
We went from North Korea to M&M. That's a lot, man.
What's in this tea?
Well, Paul, welcome to the show. I'm coming to everyone today from, I call it my remote location. It's actually my den. Let's start with kind of a basic assessment, right? Where are we in this market cycle, and how is this particular cycle maybe different than other ones we've been through recently?
Well, I think this cycle is probably defined by AI more than anything else, right? This is a revolution that I see as only being in the second inning, and I think it's going to continue. And I think that's been a lot of the movement in the market. What's odd about this particular growth pattern that's different than others is that the safe assets are also growing as fast as the more speculative assets. Gold's reached an all-time high, silver as well. Some would argue crypto's in that basket. I don't see that as a safe alternative as much as I just see it as another asset class. But the point is, that's a little bit interesting to me that the markets are doing as well. But gold is also that safe haven doing very well. And I think that comes from a couple of points. One is an inherent lack of trust in the world's central banks. I think that's part of it. And I just think that it's an interesting time, but I think it's a good time.
Do you see a sense of optimism about all this? Is there something less than optimism that's driving some of the market indices, or is it a combination of the two?
Actually, I think it's the most nervous I've ever seen people that are investors, frankly. It's the most underappreciated bull market that we've witnessed in years, perhaps ever. Evidence of that is there's still a ton of money in money markets on the sidelines, and people are trying to figure out when to invest. And then you get a phenomena that we're seeing now towards the end of the year. We call it FOMO, fear of missing out. Not only are managers concerned that they haven't put their clients' money at work and therefore their returns aren't going to look as well as others, but also people have suddenly realized maybe this isn't a fad. Maybe there's actually a revolution going on, whether it's AI, whether it's semiconductors, whether it's political happenings. But in any event, it's really surprising to me how many people are still moving forward with one foot on the gas and one foot on the brake. They're genuinely nervous. I think tariffs had a lot to do with that in the beginning of the year. Mm-hmm. I think this last quarter is going to be an interesting time for tariffs. If we see any uptick in inflation, it's going to be this last quarter. I'm not sure where that comes down, but I think that's been an area that's been unsettling for people. But overall, it's more nervousness than anything.
You're on record as being somewhat bullish about the Trump tax cuts and the impact, Paul, that these tax cuts ultimately will have on all Americans. Kind of unpack that for us a little bit.
Yeah, I think one of the reasons, and the main reason I was bullish, is the extension of the tax cuts prevented perhaps the greatest tax increase in U.S. history. So I think from that standpoint, it was stacked in the favor of doing that. This tax bill had a number of factors that crosses all ranges of economic success. Clients that are doing very well benefited from it, and clients that are on the lower end of the spectrum. For instance, auto loans, right? Auto loan interest used to be deductible. It hasn't been for years. They're going to sunset that in 2028, but up to $10,000 a year of auto interest will be deductible. That's huge. I used to live in New York. I have good friends in Long Island that aren't in over-the-top houses that are paying $30,000 a year in property taxes. The SALT deductions are huge to them. You add $20,000 in state income taxes, and they've got a $50,000 bill before they're out of the gate. Now, again, that sunsets in 2030. This is alarming to me on any of these political issues because I'm not sure if there's a change in administration, if there's a change in Congress, who knows? But the sunsetting of these tax provisions are 28 and 30 respectively. So that worries me a little bit. There's a lot of good in these things. You can debate this cut in Medicaid and what this has done. I spent a lot of my years in Kentucky, a lot of rural hospitals there. I've never seen more unified politicians in a state than Kentucky worried about those tax cuts that are going to impact those hospitals. But I think on balance, the act was a really good move.
Well, it's interesting you bring up the rural hospitals in Kentucky. One of our recent guests, Lynn Barr, who's a transformative leader in rural healthcare, she was talking about the impact of Trump policies on rural health. And of course, there is a $50 billion commitment the government has now made to rural healthcare that she argues will more than offset any kind of cuts in Medicare funding. Do you think that we're now reading things differently in the age of Trump? That when the president makes an announcement like he did recently on China, we're going to tariff the hell out of them again because of rare earth minerals and their policy on that. And the market reacts, but then the market immediately reacts the other way. Are we just kind of getting used to this in the way that, Paul, we're not dialing out geopolitics maybe, but we're kind of contextualizing what we're hearing in a day-to-day fashion?
That's a great question. And I love how you put that. Fundamentals still matter, right? The markets have to do well. Companies have to do well. Earnings have to be up. All of those factors are in place. But it'd be naive to not think that when we have a president who communicates almost daily on social media, that it's not going to have some kind of impact on the markets. We saw that on Friday, where he was pretty negative about China. And then giving his speech in Israel, he was like, oh, we can take care of this. No big deal. Markets responded accordingly, right? So I think we're going to see a lot of that in the short term. The longer term issue of investing still holds true, right? You have to have innovation that we have here in America. You have to have free markets and the rule of law, which we have here in America. And I might add, by the way, Fed independence is a major issue. Our markets are the envy of the world. And one of the reasons are because of the Fed independence. So yeah, short-term moves you see impacted by political comments, and President Trump's a master at that. But longer term, you still have to have the sound economy, and I believe we have that.
Okay, so this is one where everyone should pay very close attention. What's the next big hot thing on your list? We've seen obviously AI coming into its own. We've seen green energy, of course, is on that. What other kinds of things, even beyond those, are you kind of keeping an eye on that you think has tremendous upside potential, but maybe also some tremendous risk at the same time?
Well, risk not as much, but the tremendous upside potential is in power generation, right? This AI boom will come to a grinding halt if we don't increase our ability to generate power. And it's already happening. You see this stodgy investment called utilities last year had a banner year. If you were just in the utilities ETF, you scored a home run and you did well. I have a lot of family in Pennsylvania, and most people know that 3 Mile Island has recently been taken over by a subsidiary of Microsoft. They're going to regenerate that plant. You'll see that in other places in the country as well. Nuclear, especially the smaller versions of nuclear, will be growing. But AI won't go much further unless we fix that. I also think rare earths are going to be something that we're going to see a lot more of. I commend Jamie Dimon and JP Morgan for the announcement they made where they're going to allocate up to $10 billion of investing in types of things like that to reduce and ultimately remove, I hope, our dependence on countries that, let's just say, are less favorable to us than others.
You talk about energy, and I'm totally in agreement with you. We had the Energy Secretary, Chris Wright, on the show, and he talked a lot about having to have everything on the chessboard in play, nuclear being one of them, right? But not the only thing. And I asked him about electricity generation and transmission as a major, major challenge for this country. For that to not be as much of a challenge, we have to have the critical natural resources kind of at our beck and call to be able to have that sustainability we're looking for. So we need all of these things in play. And I think the investment that this administration is clearly signaling they're making in those kinds of resources is not only future-oriented, it's a necessity.
Yeah, I think it's the big stumbling block if we don't do it, frankly. It's the thing that could derail us in many areas. And you no longer have the risks that people worried about many moons ago. When I was growing up, right, when I was in school, you worried about nuclear power and that getting out of hand. You had the 3 Mile Island scare. You had Indian Point, which was outside of Westchester County where I lived. Today, the technology is so good. I was born in Germany. They distanced themselves from nuclear power many years ago literally decommissioned all their plants. The last one was to go down this month. They're taking major steps to recondition that plant. They're looking at France as the model. Germany has never looked at France for anything, let alone being the model of anything. France, of course, is using the most nuclear power in Europe. Germany has decided they need to get on that train and quickly because they made a strategic error relying too much on Russian energy. But the point is, it's growing all around the world. And I think that's the answer to a lot of this.
There are a lot of people who have done well in life, Paul, that are increasingly concerned about the squeeze, their financial squeeze. They're funding two households. They have aging parents. They have adult kids. What is your advice to them about trying to have more confidence that they have what they need moving forward with more and more obligations and expenses coming into play?
It's a big problem, frankly. We hear it a lot in our client meetings. This is something that they're very nervous about, right? Either the kids have moved back home because they can't find a job. I have neighbors that are dealing with that. They have wonderful kids, but the parents are like, I raised you, you're 24 years old, now you need to get out of here because I want to have some fun. The other issue is that it increases their debt. They have paid off houses that they're now taking home equity loans on to fund some of this stuff. It leads to a greater sense of economic security at the very time that you would think that they would feel a lot better about themselves. And it's sad. I'm not sure there's a good answer for that other than, you take a play out of the Asian playbook, right, where it was expected that the parents came back to the children to live and they would take care of them, right? Now, you could argue that our society is not necessarily set up for that. Florida, you've heard of something called the Villages.
Sure.
It's the number one zip code growing area of Florida, perhaps in the Southeast, because many have decided, no, we're not bringing your mother and your father here. I'm going to go buy them a house in the Villages where we can go visit them on the weekends. So there's a number of different adaptations to this, but it's a factor, Adam. You're smart to bring it up.
So let's make this a generational thing. What is your advice to Gen Zers, young people who are just starting to make their way in the world? There's more concern than ever about their ability to even come close to what their parents have generated in terms of, financial security. What do you tell them?
So the good news is that generation doesn't have the same disease that baby boomers have, which is they've learned to spend less than they earn, and they've done it quickly. And they tend to save pretty regularly as well. Now, they'll move around from job to job a lot, assuming they can get a job. That's another challenge that they have. But they're not frivolous. They're not counting on their parents to leave them money. Their financial literacy seems to be higher than their parents at that particular age. I see them investing. I see them being careful with their money. They're not buying houses because they think, A, they're overpriced, and B, the interest rates are too high. So they're being careful. And it's a generation that I hadn't expected that from, but I'm glad to see it.
So that's interesting. You say that, younger people learn to spend less and still be happy. But, at some point, the expenses of life continue to escalate. Unfortunately, that nagging thing called inflation, right, is really hard to beat. So what else can they do to try to start to build for themselves financial security?
Well, I think they do a lot of that naturally, right? The Robin Hoods of the world have allowed them to basically buy fractional shares on their phone, and they do it. And we're seeing them invest way more than, say, my generation did. We see them saving and investing. They tend to be risk adverse. I mean, there's as much in a bank account as there is in a stock account. So that's interesting to me. I also think the inflation side is not going to be as much of a problem as most people think. We had I think, a momentary blip in the graph with the flooding of liquidity after COVID, but that caused that inflation to a level we haven't seen. It's back down now to a reasonable level, and I see that continuing. Tariffs have me a little bit concerned. I've seen estimates of raising inflation 0.5% now rather than a full percent. We can deal with that. Under 3% inflation is still very workable. I don't see that being a problem for that generation going much higher than that.
What is the one kind of classic mistake people make in terms of managing their money that could kind of change everything?
Not starting to invest early enough. If you're trying to compound your capital, nothing substitutes for time. You can't get that back. If you start later in life, you just have less time for that money to compound. Conversely, if you start early, by the time you're 40 years old, you have some decisions to make, including if you want to keep working for the quote man anymore, or the woman, as it may be. The other thing, and I mentioned it earlier, is learn to spend less than you earn. That is a game changer for people. It's amazing how if you have a little bit each month to allocate away, how that grows.
Are you generally optimistic as you start to look out a bit on the horizon about where we're heading?
I'm very optimistic of the future going forward. I'm not blind to the risks that are out there. I think if we don't have any self-inflicted wounds, those are the things I worry about. I think the world's economies are going to do very well. We are still the innovation leader. We'll continue to be. What I love about our system is the transparency. I look forward to the time that interest rates are going to be a little lower and regulations are going to be a little less. And I think that's going to fuel the next phase of this market.
No, I can tell you what I'm taking away from this conversation, because as soon as we're done, I'm calling my broker, right? I'm investing. Obviously, money drives a lot of decision-making in life. And obviously, it's something that occupies a lot of time because we all want to feel secure. But people like you, Paul, who have really spent their life dedicated to trying to give and provide and lead people to financial security is really important. The nice thing about speaking with you is this is another example where information is power. The more people know, the more comfortable they are in how they're moving forward. And I encourage everyone to do their own research as well as to seek out help from people like you, because it's always nice to have a Sherpa going up a mountainside they're not familiar with.
Thank you, Adam. Thank you for having me. I really appreciate it.